the headline figures, revenue doubled year on year to $13.5 billion US, higher than Nvidia's own forecast and the market as well. EPS, $2.70 a share, 429%.
5 years ago, Nvidia was still a small company that generated just over $11 billion in revenue for the 2019 fiscal year. However, the tide changed quickly as the NVDA stock traveled from $36 to $600. Just imagine being one of the investors who owned shares in the company. They've won huge with a 364% increase. So how did Nvidia make it up to that level? With such a pace, where does the company see itself in another 5 years? Where it started from. Nvidia was founded in 1993 by current chief executive officers Jensen Huang, Chris Malachowski, and Curtis Preem. Nvidia Corp designs, develops, and markets graphics processors and related software and hardware products. The company has pioneered the graphics processing unit, a chip or electronic circuit capable of rendering graphics for display on electronic devices. GPUs were originally designed for the PC graphics market and video gaming industry. But because GPUs are capable of complex computational calculations, Nvidia's architecture has become a crucial technology for artificial intelligence, machine learning, autonomous vehicles, robotics, augmented reality, virtual reality, and cryptocurrency mining. The company introduced the GeForce 256 in 1999, calling it the world's first GPU. In January of that same year, Nvidia went public through an initial public offering and attained a breakthrough, setting a new standard for 3D graphics. This marked the beginning of Nvidia's ascent from a small company to a tech giant, and today, the company's GPUs power many of the world's fastest supercomputers. Despite early challenges, Nvidia's commitment to innovation and strategic diversification beyond gaming into areas like data centers and artificial intelligence cemented its position as a key player in the graphics and computing markets, turning the GPU into a growth engine. When Nvidia was founded in 1993, it would have been hard to imagine that the hardware it was pioneering, the graphics processing unit, would have such a transformative effect on the technology landscape. Nvidia focused on GPUs and diversification, the main reasons behind the company's success. It goes beyond gaming into high-growth markets like AI, data centers, and autonomous vehicles. Nvidia successfully leveraged its expertise to penetrate these markets, capitalizing on the increasing demand for AI-powered technologies and data processing. This diversification expanded Nvidia's revenue streams and reduced its dependence on the cyclical gaming industry, contributing to a more stable business model. Additionally, strategic acquisitions and partnerships with AI startups and leading technology companies further strengthened Nvidia's position, fostering innovation in emerging sectors. What happened with Nvidia's acquisition of ARMS? During this period, Nvidia announced that it had agreed to acquire ARM Limited, a UK-based semiconductor and software company specializing in AI, from Japan-based SoftBank Group Corp. And the SoftBank Vision Fund for $40 billion. Nvidia said that it expected the transaction to close in approximately 18 months. However, the deal came under intense scrutiny from regulators worldwide and is thus unlikely to be completed within the original timeframe. The U.S. Federal Trade Commission sued to block the acquisition in 2021 due to antitrust concerns after a unanimous vote by commission members. Here is Bloomberg's report on it.
I think the fact that ARM is being used by pretty much every hardware maker, whether it's on the mobile side or the metaverse side, it's just too important of a company for Nvidia to buy and let Apple or somebody else let that happen. So in this case, we sort of expected this.
The FTC said combining the two chip companies would give Nvidia unlawful control over technology that rival firms need to develop competing products. Let's listen to the CNBC report.
that it will stifle chip innovation and, quote, allow the combined firm to unfairly undermine NVIDIA's rivals. By the way, Jim, not a surprise to anybody, including us. We've been talking about this deal as being highly unlikely to be able to get approval, not just here, but in the UK and potentially in China.
The commission also said that the combination would create the potential for stifling innovation in next-generation technologies, such as those used to power data centers and car driver assistance systems. Some weeks before that, the UK's antitrust regulator, the Competition and Markets Authority, launched an expanded investigation into the proposed deal. The CMA looked into antitrust concerns and national security issues associated with the acquisition. In addition to US and UK regulators, the proposed Nvidia ARM deal faces scrutiny from regulators in the European Union and China. On February 7, 2022, Nvidia and SoftBank Group announced they ended the acquisition talks due to significant regulatory challenges. ARM licenses significant technologies used in chips by Nvidia rivals, which raised major antitrust concerns to regulators who believe that Nvidia could use them to give its products a major advantage. SoftBank is now looking into a potential IPO for ARM, Nvidia, and the chip shortage.
People want to buy cars. Car makers can't make any more cars because there are no semiconductors. So that's never happened.
By late 2020, it was apparent that a global semiconductor shortage was underway. This was creating major, escalating disruptions for consumers and for many global technology, auto, and consumer electronics companies that use chips in the products they make and sell. The reasons for the shortage, which is continuing, are numerous. They include supply problems due to factory closures and severe weather amid the COVID-19 pandemic, sudden spikes in demand for chips by consumers and companies, and an unexpected surge from cryptocurrency miners. This crisis proved to be a boon to Nvidia. The company's chips are used in gaming consoles and data centers, which have seen soaring demand during the pandemic. The company's quarterly revenue rose 50% year over year to hit a new record of $7.1 billion in Q3 of 2022.
Nvidia, that company coming out, as we said, set to open at a new record here after the company's fiscal third quarter numbers beat estimates, $1.17 versus $1.11 that had been estimated by analysts. Record revenue for the company, and the forward forecast is ahead of estimates as well. You see there that revenue beat at $7.1 billion.
In a conference call with analysts, CEO Jensen Huang said he felt good about the company's supply despite the chip shortage. While soaring chip demand drives Nvidia's record financial results, the company is still concerned about possible shortages because it's a fabless company. That means Nvidia does not manufacture its chips. Instead, it designs chips and outsources the manufacturing to third-party companies for fabrication. Nvidia could thus still be affected by the shortage if its third-party suppliers cannot manufacture chips fast enough to meet soaring demand. However, the supply situation improved in 2022, reducing Nvidia's supply disruption risk. Nvidia's huge catalysts point toward hot growth. 5 years ago, Nvidia was still under the $12 billion yearly revenue benchmark, with gaming being its biggest business segment at that time, as it accounted for 53% of its top line. The data center business only produced a quarter of its total revenue then, but the situation has changed dramatically. The company now gets 80% of its revenue from selling graphics processing units for the data center market. Gaming is now a smaller component, with just under 16% of Nvidia's fiscal 2024 third quarter revenue. Still, Nvidia is the leader in both of these markets. According to third-party estimates, Nvidia controls more than 80% of the AI chip market, and it has a similar position in the market for discrete graphics cards deployed in PCs. The good news is that these markets are built for solid growth over the next 5 years. According to Nvidia's peer Advanced Micro Devices, the AI chip market could generate annual revenue of $400 billion in 2027, more than 9 times this year's $45 billion. According to Mortar Intelligence, the gaming GPU market is forecast to grow at an annual pace of almost 34% through the end of 2028. The cloud gaming market forecast to clock annual growth of 39% through 2028 and generate annual revenue of $23 billion at the end of the forecast period could be another catalyst for Nvidia, given the company's dominant position in this space. More importantly, Nvidia has been taking steps to remain the leading player in these markets through its product development moves. The company has already accelerated its product roadmap in AI chips. It will reportedly make its next-generation gaming cards using a more advanced 3-nanometer process than the current RTX 40 series processors made using a 5-nanometer process. Ideally, a smaller manufacturing node should allow Nvidia's new gaming chips to pack more computing power and consume less electricity simultaneously. This explains why Taiwan's semiconductor manufacturing, from which Nvidia sources its chips, claims that the 3-nanometer chips could boost performance by 15% and lower power consumption by 30% compared to the 5-nanometer chips. This indicates that Nvidia is setting itself up to take advantage of the impressive growth in the key end markets that contribute significantly to its business. That's why it won't be surprising to see the company's earnings grow faster over the next 5 years than they have over the past 5 years. Shares of Nvidia delivered gravity-defying returns in 2023, soaring 240% to deliver 10 times the returns of the S&P 500 index on the year. In the process, Nvidia became the first semiconductor designer company to join the ranks of trillion-dollar companies amid the artificial intelligence boom. While 2024 has started on a sad note for U.S. tech stocks, sector giant Apple having faced 3 downgrades within the first half of January, Nvidia has continued its upward trajectory, up over 16% year-to-date. NVDA is among the top 5 S&P 500 gainers. Here is a CNBC report on it.
Because I know we've seen a little weakness recently in some of the names like Nvidia, but don't kid yourself. I mean, just look what's going on here.
Here's NVDA's 2025 prediction, plus the key factors that could drive the shares over the next few years. What's driving the rally in NVDA stock? Key factors behind its success in the stock market. The first one is technological innovation and market leadership. One of the key factors behind Nvidia's success in the stock market has been its unwavering commitment to technological innovation and its ability to establish market leadership. Nvidia has consistently pushed the boundaries of graphics processing units, which helps produce several cutting-edge architectures and features that have revolutionized the gaming and computing industries. The company's GPUs have become the gold standard for high-performance computing, attracting a loyal customer base and driving strong sales. Nvidia's relentless pursuit of technological advancements, such as the introduction of real-time ray tracing and deep learning capabilities, has positioned it as an industry leader, setting it apart from its competitors. Another one is its diversification into a higher growth market. For instance, an investor who invested just $100 in Nvidia shares 5 years ago is now worth around $1,339. This isn't surprising, though, due to the chipmaker's impressive growth in revenue and earnings handsomely. A big chunk of those gains came in 2023, driven by a significant acceleration in Nvidia's growth thanks to the company's dominant position in the market for artificial intelligence chips and the recent recovery in the personal computer market, which kick-started the growth of its gaming business. Through this high AI chip sales, the company posted revenues of $18.1 billion in the most recent quarter, which was over triple what it sold in the corresponding quarter of the prior year, and forecast revenues of $20 billion at the midpoint for the current quarter. Nvidia's strategic partnerships also played a crucial role in enhancing its market position and contributing to its stock performance. The company has collaborated with leading technology companies across various industries, leveraging synergies and expanding its reach. By partnering with industry giants like Microsoft, AWS, and Google, Nvidia has integrated its GPUs into its platforms and cloud services, providing customers with a seamless and powerful computing experience. While Nvidia partners with big companies, it acquires several organizations, just like it tried to acquire ARM in 2020. These strategic acquisitions have been instrumental in broadening its technological expertise and fueling its growth. The company has targeted acquisitions of companies specializing in artificial intelligence, autonomous vehicles, and networking technologies. For example, the acquisition of Mellanox Technologies, a leading provider of high-performance networking solutions, has strengthened Nvidia's data center capabilities and positioned it to address the growing demand for data processing and interconnectivity. It also allowed the company to integrate complementary technologies, unlocking new market opportunities and revenue streams. Nvidia in 5 years. Nvidia is quite optimistic about its business outlook for 2025. During the fiscal quarter 3 2024 earnings call, CEO Jensen Huang replied in the affirmative to an analyst question on whether the company's data center segment, which sells AI chips, would grow even in 2025. According to him, the data center can grow through 2025 as Nvidia expands its supply chain globally. Even better is that analysts forecast Nvidia will grow much faster in the next 5 years compared to the growth it has clocked in the previous half-decade. More specifically, consensus estimates forecast Nvidia's earnings to increase at a compound annual growth rate of 103% over the next 5 years. That would be more than double the 48% compound annual growth rate Nvidia's bottom line has clocked in the past 5 years. Just imagine being one of those investors earning around $1,000 with a 48% CAGR. Now that's going to be 103%. Isn't that a massive profit? A closer look at Nvidia's key growth drivers will tell us exactly why its bottom line growth is expected to step on the gas over the next 5 years. Wall Street analysts were also bullish on NVDA, which has received a consensus rating of strong buy. Of the 36 analysts covering the stock, 30 rate it as a strong buy, while 3 say it's a moderate buy. The remaining 3 rates the stock as a whole. Nvidia's mean target price of $646.54 is 13.4% higher than the stock's current price. However, its street high target price of $1,100 implies the shares are roughly doubling from these levels. Investors' expectations over the next 5 years. Nvidia is on track to finish fiscal 2024 with revenue of $59 billion. That translates into a 5-year revenue CAGR of 38%, using the company's fiscal 2019 revenue of $11.7 billion as the base. For comparison, Nvidia's revenue growth is expected to be much faster over the next few years. The company is expected to generate almost $108 billion in revenue in fiscal 2026. That points toward a 3-year revenue CAGR of 58% using the fiscal 2023 revenue of $27 billion as the base. If we assume that Nvidia's annual growth slows to even 30% in the 3 fiscal years following fiscal 2026, its top line could hit $237 billion in fiscal 2029. Nvidia's 5-year price-to-sales ratio is 20. Multiplying that with the company's projected revenue in fiscal 2029 would translate to a market cap of $4.75 trillion. That's nearly 4 times of Nvidia's current market cap, indicating that a $100 investment in this hot tech stock could go higher once again in the next 5 years and make investors richer. With Nvidia possibly producing a profit for long-term investors, it's a huge opportunity. Are you going to utilize this? Let me know your answers in the comments section. If you found this video insightful, don't forget to like and subscribe for more financial updates. See you in the next one.